Hey, this is Byron. Good morning. This is me trying to give you a better understanding of the stock market. This is very important, so write some of this stuff down. Okay, today is January 12th, 2026. First of all, like I said before in my previous videos, you have to get an online brokerage account. That's the first thing you need to do. Get an online brokerage account. Now, there's a different ones. It's different levels when it comes to this. There's some that cost fees. There's some that will give you margins. There's some that will, how do I say it, not do what's right by you. So what you have to do is research it. Just find an online brokerage account that don't charge you anything to put your money in it and to give margins. What margins is, perfect example. If you have $10,000 and you put it in your online brokerage account, which is still yours, they will give you another probably $10,000 in buying power. That's an example of margins. That's the first thing you do. Now, that's just some do's and don'ts. Some more do's and don'ts is don't just go up there and pick a stock because you think it's a good name, like Walmart or Amazon or something like that. Don't do that. I'm trying to teach you. You want a stock that's underpriced. Names don't mean nothing when it comes to the stock market, especially if you're doing short-term investing. Now, long-term, that's a little bit different. ETFs and index funds is pretty good for beginners when you're doing long-term investing. But I am a professional short-term investor. I am Byron, the stock master. I'm the best in the world. I'm making money for so many people, so many different people. One thing you have to do when it comes to stock is have patience. You have to have patience. Stock just don't keep going up. It just don't happen. But now give me your opinion and comments on this. That's what you want it to do, right? It don't happen that way. But I'm gonna give you some examples. I'm gonna teach you a little bit about options tradings and things like that. I made some videos about that, which I'm gonna show in a second. But right now, I just want to give you an understanding of some do's and don'ts when it comes to the stock market. But I want to go to this next section here. But here are some more do's and don'ts when it comes to the stock market. Some things you need to know. This is another professional and a friend of mine that would like to talk to you. Give him 1 second and give him your time right here. And I want you to listen to what he has to say. He's a pretty educated person here. Here we go.
Here are some investing mistakes to avoid if you are a beginner in the stock market or you're new to stocks. Let me save you some trouble. Let me save you some heartache. Let me save you some money. Let's begin. Investing mistakes number 1.
Here we go.
If a company announces that they're going bankrupt, you should run away from that stock. You do not want to be buying into a company that has just announced that they're going bankrupt. The writing is on the wall. Here's what happens. If a company says that they're going bankrupt, the stock, it's going to continue to trade. They're not required to delist or anything. So if you're buying that stock that's going to go bankrupt, thinking that's going to make a recovery, you're being foolish. More often than not, the stock gets wiped out. The shareholders get wiped out. The stock value goes to zero.
That's right.
If you're trying to do a quick flip,
the stock is going to go down.
Buy low and sell a little bit higher, you're just gambling.
That's right.
Therefore, if a stock
keep going down,
announces they're going bankrupt, just don't mess around with it. I mean, you're just being foolish, or you're just gambling. Please avoid that mistake. Investing mistakes number 2. Don't buy penny stocks from the over-the-counter market, the OTC. Just stick to your stocks on reputable exchanges. Again, this is for beginners. If you are a beginner, just stick to the name brand exchanges. Buy stocks on the New York Stock Exchange, the NYSE. Buy stocks on the NASDAQ. Don't go to the over-the-counter markets. Don't buy pink sheet stocks. There's a reason why those companies, those stocks are over there. It's usually because
That's a great point he just made. Stay with the New York Stock Exchange. Let me switch the screen. Stay with the New York Stock Exchange or the NASDAQ. Don't try to get over-the-counter stocks. Those stocks, you will lose money. Everything comes down to making money. That's all it does. So stay with the NYC, the New York Stock Exchange, or the NASDAQ. He's absolutely right what he's saying. Do not go to over-the-counter things like that and try to buy stocks off of that. And here we go again. We'll go right back to him. Here we go.
They fail to meet the requirements to be listed on a reputable exchange, or that they got delisted. That doesn't sound too promising of a company in most instances. Therefore, especially if you're a beginner, please avoid the over-the-counter markets. Like, that's very dangerous.
Very dangerous.
Stick to the reputable exchanges. Stick to the stocks on reputable exchanges. Investing mistakes number three.
Yep.
Don't participate in the message boards, the online message boards. You do not want to open up that box. You're just going to be talking with internet trolls. What I mean is that you're just going to be talking with weirdos. You're not going to be adding value. You're not going to be having productive conversations. You're not going to be doing due diligence, talking with these internet trolls from these who knows the person behind the other side of that screen.
That's right.
You just don't go down that bunny hole.
Okay, those are just some do's and don'ts, but there's a couple of more things I want you to understand. Is you have to have patience, like I said. Like right now, when you flip the screen, the Dow Jones is down. Let's see it. Yeah, the Dow Jones is down 103 points. That's going to take a lot of stocks down with it. You have to understand. Don't panic. Do not panic. Your money is still there, and the stock is going to go up if it's a strong stock. And I am the stock master. I guarantee you, if I give you a stock, it's going to go back up. But stocks go up and down. Look at the NASDAQ. The NASDAQ is up 68 points, but the Dow Jones, the New York Stock Exchange, is down 93 points. And you can look at my stocks that I gave you. You're going to see they're a little bit down too in 1 second. Okay, I just moved the screen. Now, if you look at my stocks that I gave, you can look and see they're down. APO is down 1.67. Victoria's Secret is down 1.79. And MU is even down only 33 cents. That's not really down, trust me. That's not down. The stocks will bounce back. But the fact that they've been going up so much. All the stocks I've been giving you, APO, Victoria's Secrets, MU, been going up so much, it's going to go down sometime. But don't give up on them. They will go back up. MU might go up 20 points tomorrow. They've been going up like crazy. The price point been going up on that. The price target been going up on that stock like crazy. This is about making money. That's all it is. Everything you should focus on is come down to making money. Now, there's a lot of times I will not have a stock for you. You have to know how to pick your own stock. And it's kind of hard. But some examples. You have to find out, let me switch the screen here. You have to know how to look at the news on the stock and what to look for when it comes to the stock. The news, that's very important. And what the analysts say. Read into what the analysts say. This is how you project trends. That's why I'm so gifted at when it comes to the short-term stock investing. I know trends. I know how long stocks might go up for a day, might go down the next day. That's what I'm so good at. But first of all, before I go any further, please like, subscribe, and share my video. But one thing I want to add to that, hit that bell for me so my videos can get to you immediately so I can start making money for you. That's all I want to do, make money for you. Stock is the greatest form of wealth if you do it the right way. But you can lose everything if you do it the wrong way. That's why I'm trying to get my videos to you. I just gave you some do's and don'ts, and my friend gave you some more do's and don'ts. But there's a lot more to consider. But what I understand is you don't have time to research all this stuff. So I do it for you. I do all the legwork for you. You don't have to do anything. I'm going to do everything for you. And you're going to make money. And guess what? I don't want nothing in return. Nothing. Because this is my calling from God. I just want to make money for you. That's all I want to do. I'm making money for myself too. Every time I give you an investment, I invest into it myself. Okay, those are some more do's and don'ts and some more things you need to know. Okay, the three stocks I gave you, AP, let's see, look at it now. If you notice, MU is starting to go up at the bottom there. It's not clear. Let me get the screen clear. MU is starting to go up. VS Victoria's Secret is still down just a little bit, $1.64, but it went up extremely yesterday. It went up a lot yesterday, and APO is down a little bit. But MU is starting to go back in the right direction. But the Dow Jones is still down 95 points. That's just the way stock goes. But once you buy a stock, I'm trying to give you understanding. You are part owner of that company. Just a little bit of percentage, but you're just part owner of that company. There's 4 different types of investors. The first thing you have to do is learn what type of investor do you want to be. Do you want to be a long-term investor? Do you want to be a short-term investor? Do you want to be, I can't pronounce it, the speculator investor or a dividend investor? If you want to be a dividend investor, you want to get a stock that pays dividends. Does free money for you. So, like every quarter, a stock will pay you free money on certain stocks. You'll see it on the stock if it pays dividends and the dates it pay. The X date when you got to have the stock and when it's going to pay, the date it's going to pay. Long term is something like I said, Amazon, Walmart, big companies. You know they're going to keep on going up, but it takes years and years. Now, short term, that's what I do. You get rich quick. You make money quick. That's what I do. Those are some examples. But I want to teach you a little bit about options, and here we go right here. Hey, this is me teaching about options trading, and this is what I did a long time ago. And I taught about swing trading, options trading, and other things too. There's my screen on there. I did all this training on so many different stock techniques. But this is one day I was teaching about options trading, fundamental analysis, technical analysis, all that. I got videos on all that. So research my videos if you want to learn anything about the stock market. But this is me teaching about options trading, and here we go.
Get into investing their money, but not in day trading. They want to invest in options as well. Okay, let's talk about options. Say a stock is probably at, I'm just giving you some examples, $32 a share. I'm gonna give you some examples. Now, on options, you'll see a format. Say the strike, they got different strike prices. You know, different prices you want that stock to get to. Say the strike price is at 36, but it's a time frame. You want it to get to 36 in 30 days, and they're gonna charge you maybe like 70 cents or something like that per share. A strike price, one contract is 100 shares. Okay, one contract is 100 shares. Okay, you want that strike price to get to 36. It's probably at 32 right now. This says at 32, trading at $32 a share. Okay, once that stock get to 36, it goes up to 36. Calls, you want the stock to go up. Is at 32, calls, you always want the stock to go up. Say it goes up to 36. Okay, you still haven't made any money because they charge you 70 cents per, 70 cents. They already charge you 70 cents, per 100 shares, one contract. Okay, so you didn't make any money. But say it goes to 37, you only made 30 cents per share because you lost 70 cents per share.
See, one thing about options, there's a time frame on it. Time frame. Say you get it for 2 weeks. Say it's today is January 12th, like I said, and you wanted to sell that contract by January 25th. On January 25th, if that stock do not reach that target price right there, you can lose money. But say it's at 10 and you want to go to 20. Say if you get to 20, you still haven't made any money because they charge you per share like 70 cents or 60 cents. You needed to go a little bit over that to make up for what they charge you for. That's pretty much what I'm saying back in the days. I don't know if I explained it right, but just some extra information on options. Let that pretty face finish again. And don't forget to like, subscribe, and share my video. Hit that bell button too. And leave me your opinion on these videos too.
See what I'm saying? But go up to 38 or up, you make some serious money.
Exactly.
It's very easy. Okay? Calls. That's how it works. But within 30 days, the contract is up in 30 days. So that's one thing you got to remember. The longer, say you want to keep it for 7 months instead of 1 month. The longer you want to keep the stock, the higher the price is. So it won't be 70 cents per share.
It'd be like $2.
It might be like $4 or $5.
Yes, $2, $3, $4, $5.
It gets very confusing.
The longer that strike price is, the amount of weeks or months.
Trying to make sure I ain't miss nothing. It's a lot of things. This is about calls. Calls, you always want the stock to go up. Always.
Calls up, puts down.
Let me erase some of this stuff. You gotta write this stuff down because options is very confusing.
Very confusing.
Like I said, with options, you have to the longer the term, say instead of 1 month, you want to keep it for 7 months. Probably the more expensive is going to be.
Exactly.
Say that's part of calls and puts. Remember, calls is you want the stock to go up.
Puts is when you want the stock to go down.
And puts, you want the
stock to go down.
The price to go down. I'm saying like that, not the stock, the price to go down on puts. Calls, you want the price to go up. puts, you want the price to go down. Okay, remember one contract when it comes to options is 100 shares.
100
You need to
shares.
write this down. One contract. So some people get 5 contracts. That's 5.
Okay, I'm gonna stop it right there. I don't want to confuse you. I'm gonna have somebody else talk to you too as well about calls and puts, because when you're beginning, when you first get into the stock market, you don't want to do options. Options is for like people have been doing it for years and years and years. So just don't do that right there. So you need to concentrate on a regular stock, like a long term, like an index fund, or maybe ETFs, things like that. Because what ETFs and index funds are, you're buying a bunch of stocks together, and it's a rarity. All those stocks is going to go down at once. You're going to gradually make money. You're not going to make quick money, but you're going to make money. I want to have one more person talk to you, and I'm going to end this video because I'm trying to teach about the stock market, and I want you to have patience. That's the thing. That's the main thing I want to get you to get out of this video. Have patience when it comes to the stock market. Okay, this is a professional options trader right here. I want you to give some insight on exactly what he's talking about here, and here he goes.
In the stock market, then watch this video. This knowledge will level you up. Now for this video, I want to tell you, no rush. Take your time. There's certain parts of this video that you're going to want to rewatch, and it's most likely going to take you more than one sitting for you to digest all of this information. That's going to be normal. So please subscribe, and we're going to start with call options. Okay, so let's break this down to the fundamentals. So what are options? Options are simply contracts. They're options contracts. So it's essentially a deal between you and another person. So I want to show you this from the perspective of the buyer. So in our example, you will be the buyer of the options contract. And again, this is a call option. Now we'll just pick any stock. And in this example, we'll use Yelp stock. So the price of Yelp is at $35.84. But to keep it simple, let's just round it up and say that Yelp is at $36 a share. So what if I tell you, I'll give you the option to buy Yelp at $38 a share in the next 30 days. And for you to have that option, you pay me 80 cents.
He said that perfect. So I didn't say it on my options video. When you buy options, you can buy it for exactly what it says right there. You can get it for 2 weeks. You can get it for 3 weeks. You get it for a month. And you buying it at that price, it'd be like $36 a share. But you're trying to, they saying at 30 days, it got to be at $38 a share. That's all they're saying. At 30 days, it has to go up. That's a call option, not a put option. A call option, when it goes up, it has to go up to $38 a share, or you could lose money. But you notice at the bottom it says you pay 80 cents per share extra. So if you go up to 38, you do not make money because you still lose that 80 cents per share. You had to let it go up to at least 39 or 40 to actually make money. But remember, it's a time frame on this. If you do not go up to 38 within that 30 days, you lose that 80 cents. That 80 cents times 100. So you can lose some big money if you buy a bunch of contracts. One contract is 100 shares. But I'm gonna go ahead and let him finish.
Well, honestly, it's hard to say because we don't know if the stock price of Yelp will go up or down in the next 30 days.
That's right.
But let's just say that you buy that contract for 80 cents. And now you have the option to buy Yelp at $38 within the next 30 days. So here's how you win. The price of Yelp right now is at $36. So let's say that within the next 30 days, the price of Yelp hits 42. Then in this situation, you're going to make good money because here's what's going on. So the options contract that you bought was a call option. So you paid for the option to buy a stock at a certain price within a certain amount of time. Now in our example, Yelp hits $42. So you have the option to buy Yelp at $38. So would you buy Yelp for $38 in this situation? So the answer, well, it should be, of course you would, because you could buy it for $38 and then immediately sell it for the going rates of $42. And then you end up with a gain of $4 a share.
$4 a share.
So here's what your profit would look like. You buy Yelp at 38, you sell it for 42, but you have to remember that you paid 80 cents to have this option. So you net a profit of $3.20.
Because you got to take
And I
away
want
the
you
80
to know that
cents.
this is a real life example. You could take a look for yourself. So this is the Robinhood platform. So all platforms.
Okay, I'm going to end this video by saying, just have patience when it comes to stocks. When I give you a stock, there's a good chance it's going to go up and down, but more up than down. So when it go down, don't panic. And remember my 3 rules. Don't get greedy. Once you make a couple of thousand or a couple of hundred, go ahead and get rid of that stock. You made some money. Take the money and run. And buy low, sell high. When the stock goes up and down, when it go up, you sell it, of course. But don't buy a stock when it's up. Wait until it go down, because stocks go up and down. That's just where it goes. Even MU, Micron Technology, it goes up and down. So don't worry about that. That's going to happen. And the last thing is, and this is probably the most important, timing is everything. That's the same thing with buy low, sell high. Timing, swing trading, options trading, everything. Timing is the most delicate thing you can have, the biggest way to make money. And let me do the research for you when it comes to stocks. Do not try to do it yourself. I've been doing this for 30 years. Let me use my professional opinion and make money for you. Let me switch the screens here. And that's very important to me. Let me move this out the way. Let me do the legwork for you. I will make money for you. Please like, subscribe, and share my video. And hit that bell button too, so my videos can get to you immediately. I don't try to take you through too much technical part. All I do is I do all the technical parts, and I will give you a hot stock. Tomorrow or tonight, I will have another hot stock for you, and it will make money for you. I am the stock master. I'm the best in the world at this. Please like I said, please like, subscribe, and share my videos so my videos can get to you so you can make money. I'm going to end it right there. Thank you for your time, and let's make some money.